In this video, I want to show you how to build a trade bot that sends trading signal to your phone with only a few lines of Python. So one of the most talked about topic in this year beside the Rona is stock trading. Almost everyone that I know has turned himself into a day trader, myself included. But in reality, day trading is not easy. And just like any other new trader out there, I thought I'd be driving Lambo and living a luxury life. Instead, I sat at my desk for 8 hours straight, scrolling through a bunch of news, reading company balance sheet and stock chart. Given the situation that I'm in, I don't have an extra 8 hours to monitor the market. Therefore, I know it's time to put my coding skill to work. And this isn't the kind of bot that takes your money and automatic trade for you. Instead, it sends trading signal to your phone, which helps to take away the emotional highs and lows that might sometimes interfere with your success. Now, before we dive deeper into this video, I just want to say that I'm not a professional day trader or financial expert. This video is made for entertainment and educational purposes only. Anyway, so first we need to understand how technical indicators work and why most traders love to use them. Technical indicator is the mathematical approach to understand how stock price could behave in the future. It uses information such as historical price and volume as an input and translates it into simple, easy to read signals. And technical analysts and traders use this signal to try and predict the future of price movement. And by simplifying the price movement makes it easy to spot the weakness or strength in the price for a given stock. But there are thousands of technical indicators out there and new ones being created all the time. So the question is, which one should I use? Should I use all of them? Well, there isn't a solid answer to that question. Many experienced traders claim that they only use a few indicators in their trading. And the bottom line is, whether you're using one indicator or a combination of indicators, it's all up to your personal trading style. However, while all indicators are useful, but they each have their own set of weaknesses. There are two main categories of indicators: the leading indicators and the lagging indicators. Leading indicators are about trying to predict the future direction of a market. When used leading indicators correctly, traders can get in before the market movement and ride the entire trend. On the other hand, lagging indicators provide the delayed feedback signals once the price movement has already passed. Most traders use lagging indicators to confirm the price trend before they enter the market. And to avoid missing out on other price trend, combining indicators from different categories that complement each other can be a profitable trading strategy. If combining technical indicators effectively can help you make much better trading decisions. The most common and widely used combination is the MACD with the RSI, where the MACD indicator measures the strength of price movement, and it is calculated using two exponential moving averages, the 12 period and the 26 period. When the MACD moves below the signal line, is an indication of a down move. That means it is time to sell. And when the MACD moves above the signal line, is an indication of a good time to buy. On the other hand, the RSI indicator tells us whether the stock is overbought or oversold. When the RSI enters the oversold regions, this indicates it's time to buy. And when the RSI enters the overbought region, it indicates it is time to sell or hold on to the asset. These two indicators are often used together to give traders a complete technical picture of a market. Now, with that all being said, I'm gonna hop on my computer and show you guys how it's done in code. So I got a bit of a head start on the implementation, but I'll show you just quickly what I have done. First, we have the MACD class, which has two methods. The first method is to calculate the MACD using the historical stock prices. And the second method plots these values using the matplotlib library from Python. Similarly, we have the RSI class, which also has two methods. The first method calculates the RSI value, which fluctuates in a range between 0 to 100. Now for the client code, we'll first create two objects, a MACD and an RSI object. And to get the stock data, I used the Pandas data reader library to download the historical stock data from Yahoo Finance. Next, we're going to combine these two indicators into a single trading strategy and call it a MACD RSI strategy. And to keep things simple, we're going to tell our bot to return a buy signal whenever the MACD crosses over the signal line, and return a sell signal whenever the MACD crosses below the signal line. Otherwise, hold on to the stock. For the last part of this code, we're going to send these trading signals to our phone via text using Twilio. Twilio is a cloud communication service that allows us to send text messages around the world. I have a link down below where you can sign up for a trial account. So there you have it. Link to all the code is in the description down below if you want to check it out. And now I gotta go check out my Twilio message. Thanks for watching.